Right then, good morning everyone, as we are in the European session on Friday the 11th of August. Now we're at the end of another week of trading, a relatively quiet week of trading to be fair, across a lot of the major asset classes. In terms of percentage changes up and down, I mean it's pretty extremely volatile range on the S&P. We're only talking about this morning. Buying the lows and selling the highs seem to work pretty well, which we alluded to on Monday. But the aggressiveness of those moves from the low to the high and the high to the low meant it was a little bit tricky to actually get involved in. I see a couple of things of note overnight. Asia stocks dropped to month lows. US CPI fails to enthuse. I think it's a little bit, probably not quite that. I mean, China's yuan hits 1 month low, weighed by property woes as the deteriorating health of the country's property developers has continued to deepen concerns about the overall economic recovery. Now, with a lot of the Chinese economy, obviously, manufacturing is the main part of the Chinese economy, but a large portion of the Chinese economy, is around these property developers. There's a lot of real estate owned in China. A lot of Chinese people's wealth is tied up in real estate. So when the property sector struggles, China then struggles off the back of that. So, there's a lot of things that go into keeping the property sector going. A lot of building needs to be done. A lot of all that sort of stuff, and people's cash is obviously tied up in that as well. And if you can't shift, you can't move, you can't sell more properties, it obviously causes a bit of a slowdown. Now, there's reports then overnight that another one of the property developers forecasts a steep loss for the first half of this year, and there is a struggle to pay back some repayments. So that then it goes in line with last year. We saw this rear its head. There's two of the major property developers, the second biggest in China, couldn't pay back any of their loans. So if that again rears its head, stock market sold off the back of that. Certainly Chinese stocks got hammered off the back of that, and they are pretty aggressively lower in today's session, which I think is more of a contributing factor to Asia stocks being under a little bit of pressure rather than CPI failing to inspire anything yesterday. You can see dollar steady as CPI data encourages Fed pause bets. So it doesn't really make sense. I mean, in terms of the pricing for the next meeting on the 20th of September, there was a 5% increase in the chances of no hike at their next meeting, and the dollar strengthened off the back of that. Yields then pushed higher. So in terms of traders and active markets, not really sharing that same opinion. So a bit of a discrepancy there, which you don't usually see, which we'll try and break down once we get around to the charts. But apart from that, you can see sterling breaks 3-day fall after UK GDP beats forecast. So pretty strong growth out of the UK this morning, which we'll have a look at in a bit more detail as we get around to it in a minute onto the calendar. But US equity futures higher across the board. You can see European equity futures lower across the board. You can see the Chinese stock market heavily lower at 2.5%. Hang Seng down 70. Asia Pacific equity index for the region is down 0.7%. So Asia stocks lower on the whole. Apart from that, oil down slightly off the back of that, gold up slightly, but really they are flat on the day. There's not much movement there. You can see the Australian dollar up slightly, which is a bit interesting considering the fact that China are in trouble, but New Zealand dollar down off the back of that Chinese news, which is what you'd expect from the Australian dollar as well, but that's not what we have seen overnight. Strongest currency across the board is sterling off the back of that stronger than anticipated GDP print, which we will break down in a minute. US dollar mixed across the board, while yields globally are higher. Yields higher globally go with the move in yields post CPI yesterday. So that is interesting considering interest rate hikes, or no interest rate hikes, is being further priced in at the Fed's next meeting in September. So a little bit difficult to work out the moves post CPI yesterday. A little bit difficult to work out the move at the CPI yesterday. So brings us across to the calendar, and you can see yesterday really pretty difficult to read into, to be honest. Core CPI month over month bang in line with expectations, 0.2%. The total rate of inflation month over month bang in line with expectations, 0.2%. The core CPI year over year, headline figure year over year, both down 0.1% on consensus. So, not much positivity, not much negativity. It's not like it came in higher than anticipated, and it solidifies an interest rate hike. It's not like it's come in lower than anticipated, and it gives a clear idea that inflation still continues to come down. It just remains sticky in the middle. Markets, I'm pretty sure, don't know what to do with that, as I am not so sure either. GDP then out of the UK, you can see 7 o'clock this morning, consensus 0.2 for the year over year figure, actual 0.4. So I say strong growth. It's not exactly strong growth, but stronger than consensus. GDP for Q2 0.2%, again not exactly strong, but it's better than a negative print, better than consensus, better than the previous month. So actually not too bad on face value when you look at Q2. GDP for the month of June is 0.3% higher than consensus. So that is solid growth in the month of June. So UK growth remaining relatively stable, to be honest with you. A good trade balance. So the trade deficit pulls back slightly, moves back towards, or a little bit more towards, a surplus, lower than the previous, lower than consensus. So that is a positive as well. Good trade balance, which is non-EU, again below consensus, below the previous month. It's actually a number of positive data releases for the UK economy in today's session, or so far in today's session. You can see industrial production, consensus 0.1. Actual, I did not mean to click on that. Actual 1.8. GDP to 3-month average above consensus. Manufacturing production above consensus. Business investment for a quarter above consensus. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9 data releases at 7 a.m. this morning, all of which beat consensus. So positive, or certainly positive, for the UK economy this morning, which is why sterling has popped higher across the board, which we can see here. Sterling solid move higher, and you have to imagine that probably will continue over the course of today. I'm not so sure I'd jump in selling. Maybe cable's not the best one to pair it against. Clear Japanese yen weakness. The trend is higher on the dollar, where it's not really trending anywhere else. So sterling yen, probably something to look at over the course of today's session. See if we can get that to continue higher, especially if equity markets do not end up under any sort of pressure. But you can see the US dollar strength yesterday. Aussie, Kiwi, Euro, Sterling all lower. You can see dollar Swiss, dollar CAD, dollar yen all higher. Dollar index also higher post CPI yesterday, right, which goes in line with this move. You can see 10-year yield higher, 2-year yield higher, which is great, but it does not go in line with interest rate pricing for the September meeting. So a little bit of a discrepancy there. Let's see how that plays out over the course of today. But the charts never lie. The charts are factual evidence. We can see yields popping higher. We can see the US dollar popping higher. And off the back of that, equities move to the downside post the initial spike higher. So, you can look at headlines and stuff. You can read bits of news. You can look at interest rate pricing and stuff to see what's being priced in, see what's being priced out. But ultimately, the moves on the charts is what is actually going on in the assets that you're going to be trading. So for now, yields higher, dollar higher. Stocks under a bit of pressure off the back of that. But you're not breaking through any of the lows of any of these ranges with any sort of significance. So I'd struggle to just pile in selling these again. If buying the lows and selling the highs has played out over the course of this week, which it has, you'd be looking to be long in today's session back towards those highs. So been aggressive moves higher, aggressive moves lower. Do we get another pop back higher? Does this range continue for one more trading session this week? Hopefully buy it back somewhere up towards at least 45. The figure on the S&P 500 in terms of the afternoon, PPI and core PPI, producer price inflation. We had CPI, consumer price inflation, yesterday, which is the price of goods and services for the consumer. Obviously, PPI is the price of making goods and services. One's for purchasing goods and services, one's for making goods and services. So PPI more for the businesses, and that is expected to tick up as well. Can be a front runner for CPI. Obviously, if it costs a business more to produce something, they're going to have to sell it at a higher price. So keep an eye on PPI 130 today for some indication in today's trading session. A little bit lower than consensus, will go slightly in line with yesterday, which would be a positive. I would probably further strengthen the fact that the Fed will not hike interest rates. But markets moved the way they did post CPI yesterday. To be a little bit careful, 130 really difficult. Personally, for me, a little bit difficult to predict some direction into that. See how that plays out at 1:30 today. But as if for me then, folks, I'm gonna wrap it up there. There will be no US video today. I'm off a bit early, so have a nice weekend. There will be another video out later, a little bit later on, with the market insights. But I'll be off a little bit early today. No US video today. So have a nice weekend, and I'll speak to you on Monday.